Okay. Hi there, guys. Just let me know if you can hear me. G'day, Alistair. Let me know if you can hear me, and we'll get up and racing. There'll be a few more people coming in slowly as they get hooked up to the alert. It's not a flash day today. You know, not many of the markets actually. I'm probably a tad disorganised this morning. I'm just trading the Hang Seng had a buy on the SPY early before it capitulated, so I made a few points there, but nothing fancy. G'day, John. Um, then chased my tail a bit earlier on the Hang Seng, and it probably leads into what we're going to talk about today. Um, I was chopping around basically. I had a couple of small short losses, a couple of long losses, but eventually got on the right side and just ran up at 100 points then. So, or give or take, it was good. Good to make it back. So actually, I think it's flat for the day, so it was kind of a waste of time. But it's we'll go over that in a minute, and I'll just chat through the different bits and pieces. So I think it's a prime. We're talking about big money players, big flow of money. So, all right. So we'll get stuck into it. Welcome to Trade Setup and live stream. It's 21st of June, and a lot of people talking maybe there's some bit of tax loss selling or end of financial year selling, which I don't think so right now. I think it's just a lot of people saw that US sell off and then had all weekend to dwell on it, and of course you just know when there's weakness like that, you just know that it's going to be knocked down on the head on the open because there'll be bigger players, funds that happy to stand aside and let it capitulate as much as it wants. You're not going to try to support the open when you think there's a whole lot of retail are going to dive in and close out shorts first thing Monday morning and then go to work. So close out some longs and then go to work. They'll just let it capitulate and drag it down and soak it up on the way down, I would suggest. So yeah, it wasn't a crash hot night on Friday. Some good Aussie stocks to swing trade. Yeah, we'll look at that in a minute. So yeah, Friday night. I don't think. I mean, I think it's a combination of things. I think first and foremost, it was. I don't know if anyone knows about triple witching on the options. So it's options, futures, indices. Yeah, I can't remember what else. So there's a few things that all expire on the same session. So when you've got market makers that are playing around in the market, and I've seen it many times before um, on crude oil when I was caught on the wrong side, you can just see them targeting particular strikes. It's $5 strikes, I think, on crude. I can't remember. This is years ago, and you could see them keep ramping it, trying to trigger. Um, it's sort of the big boys playing around with each other, trying to trigger different levels because they know that once they trigger that level, there's going to be some action. Okay, so it's a bit of that. They play around with it a lot, and I think on triple witching, history shows that there's been a lot of weakness about. So yeah, so I think a lot of that started, especially in Europe, it started off, they were already down. It wasn't, you can't say they were down 100, the DAX was down 200 points because of fears of this, that, and the other. It's not. It started with triple witching, and then who was it that came out? Bullard in the US came out around 10 o'clock. I think everything started moving. He came out and saying, well, potentially he voted for rate hikes earlier than 2023. And that's what's given the market a bit of a jolt, I think, on that particular night, triple witching night. So you got some negativity because of that, which is just it's traditional. It's not because of the fear in the market. It's just because of that's what they play around. They smack different levels, or there's bigger boys protecting certain levels that they don't want to get hit at. Or your market makers playing around. So, and there's a bucket load of options that this year I think has been the highest. I don't know if ever, but there's been a lot of US options traded in this year and positions. So when you get triple witching, you know that they're going to get some action. They're going to play around with it, try to get people squeezed out, squeezed in, whatever they're going to do. Trigger levels, that sort of stuff. So anyone that's sort of borderline on a loss, they could get reamed just on the last day of options expiry. So a lot of argy bargy. So that's what I sort of attribute a lot of the weakness to earlier on, and then obviously below comes out, and then the news are trying to beat the drum of rate rises, this rate rises, that, the market capitulation, because that's what they live off, that sort of fear-driven markets. They want people to read what's going on. They want all that sort of stuff. So they'll keep beating that drum. I didn't actually see anything. I look at Reuters a lot. I didn't see anything on triple witching. But if you go and just take a bit of a look on triple witching days in the past, there's been big sell-offs a lot of time. More often than not, there's been some, markets taking a bit of a hit and then they sort of bounce back the next couple of days potentially. So whether that's going to happen now, I don't know. So yeah, a bit of a sell-off. I'll get rid of this actually. Sorry for anyone that's new. We've got, follow us on Twitter. The top left-hand corner, you'll see, if you can just see it. There you go. You'll see @trade_setup. Follow us there, and the bottom right, subscribe to us at YouTube at @TradeSetup capital AU. Jump on, take a look. If you like what you hear, it'd be great if you can leave us a like, help us build our channel and get out to more people. I'll minimize that. I want to show you today, what I want to talk about is traps and, following the big money. And I think when we talk about following big money, it's more, you're not going for these little moves. I mean, this is a 5-minute chart. This is the Hang Seng just from the open. The open was here. Oh, actually, no, it wasn't. It was here, wasn't it? 11:15. So I'll draw that up. So it's basically this next red candle. Okay, so what I'll do is mark up my levels. My key levels where I think, okay, this is where it could bounce. If it bounces off there, what's going to happen? We're going to look for a high low and a rally up. Is it going to go through, retest it from underneath, and go down? Okay, and then you've got the next level that's coming into play, and you're trying to trade between those two levels. You're not trying to just, guess what's going to happen. So when we're talking about, the concept of big money that they push around, and we all heard that before. It's in shares, big funds moving around. They'll suck it down, soak it up, and then ramp it back up again. Indices a lot, FX a lot. The big money flows at key levels. When we're talking about that, you've got to remember if there's some big money flying around different levels, they can't just get set in one hit. Like us, we're doing a couple of lots on the Hang Seng, for instance, or however many dollars a point you're doing on your CFD potentially. But it's not easy for them to get set, and they'll be, building off a level, and they might set traps. Let it flush through, bounce back, flush through, bounce back. So what it's constantly doing. Like this, for instance, you look at the Hang Seng, it was holding some lower highs into that level. We got this press down, pullback. So you got people looking at it, holding, buying into it, getting flushed out. Okay, then they're seeing people buying it when it bounces back up again. And I got caught on the 1-minute chart a couple of times. I actually went long a couple of times, so I was on the right side, but I just couldn't get set. I got chopped out, back out again. And it's not stops getting hit. It's no follow through in the market. And it was just, you sort of look at it thinking, I want to go long here, but I'm not ready I'm not sure when the market's ready to go long. So I'm not going to give it too much room if I'm wrong. Okay, so when I turn around, I figure out I'm wrong, then I'm closing it back out pretty quickly. But you'll see the market needs to find liquidity. Bigger players who are trying to load up off there, or they're trying to build some positions into stocks, for instance. They might use the futures to short into, just to get that negative tone into the market. People sell into their bids, if that makes sense, selling to their buy orders. Okay, but around the key level, generally, if this market was going to be weak, you probably should have seen, rather this fade on that first candle and pop back up, you'd rather see something like that and then come back into it. Well, that's pretty bad, isn't it? Let me just draw that up again. I'll do yellow. I'll do it a bit thicker. There you go. So when you're looking at key levels, you want to see a decent press down. Maybe the market grinds back into it from underneath. And then if it can start to hold and we get a lower high, that's what I want to see. And that's what I would expect I'd be selling into that. Okay. And knowing that, okay, they punched it through this level, we've got buyers trying to, they're sort of buying the dip, buying these minor higher lows, but realistically the market has been doing that prior. Okay, so it's hold a lower high, punch through the level. You know that the key anchor to that downtrend is way up here. Okay, so this is, for anyone that's new, this is what we're looking at time and time again. We're looking at anchors to a trend. You're trying to work, especially with your indices and FX, you're trying to work off a level, okay? But I think there's one key point that a lot of people do miss, which we'll talk about in just a minute, which will help you get on the right side of the action and not trade in the wrong zones, okay? So what we're looking for when we're talking about big money moving around, you want to see, especially around a level, you expect some action. Now you don't know whether it's going to hold that level and blast down again and really continue its way down, or whether it's going to pop back up again like it did today. So what we're ideally looking for, you want to see how the market reacts. You don't really want to see, especially at a key level, you don't want to be too eager to jump in, okay? And I'm a big advocate for not buying at a level. I would never, if the market was here, for instance, well, let's just draw it. If the market was powering into a level, you're coming to here and you go, okay, I've got a key level here. I've marked it up. I'm going to put in a bid order, a bid order, just into there, thinking that's going to hold. I'm going to hold my stop below because I think that's a key level. It's going to trade in there. I'm going to get set and it's going to bounce. Okay, I would never ever trade like that because there is absolutely zero confirmation here when the market's coming to a level that it's going to hold there. Just because it's held it before doesn't mean it's going to hold it again. And it could have held it 3 times, could have held it 4 times. It doesn't mean it's going to hold it again. More often than not, especially the way I'm looking for equity trades, indice trades, and your major indices, where I'm looking at, I actually think looking at the Hang Seng now, it could be holding this high low and starting to ramp back up again because it's coming off this level. So what it's done is, flushed around under here, got some liquidity, built some long positions, started to power up. This is your first pullback on the 5. That will close at 2, so it's got an hour to work its way back up. I did take a chunk of this, but just closed it out because I didn't want to hold it while I was talking. I wouldn't be able to talk very well. I'd be too busy staring at a position. So I'm a big advocate for not buying into a level just because you've marked it up, just because you've seen it there before, or bounced off there before, doesn't mean it's going to again. Doesn't mean it's even going to get there, okay? So what you're ideally looking for is you've marked up a level. You know that could be an action. We call it an action or a reaction level, okay? You're expecting a bit of action at that level, whether it's going to, plow through, retest it from underneath, and then you've got to be a seller, or whether it's going to sort of bounce, consolidate, and go back up again and start just dragging in some sellers and then squeeze them straight back out. You don't know what's going to happen, okay? What you're waiting to do is see what the big money does, okay? I'll spit it out properly. So you want to see what the big money does. You want to see what are they trying to do? Is there a level just below here? You know that more often than not, they're probably going to flush that. They know that the stop's going to be under there. They know that people trade like this. Okay, they might be taught like this. You buy at a level with your stop below, and then and then it's just a numbers game. I think you can, look, it is a numbers game because there's going to be times when it bounces off levels and it works out for you. You get set. There's going to be times when you get stopped out in a flush. There's times you're on the wrong side of the market completely. It just powers straight through, gets you in, straight back out again, retest from underneath. So it does this sort of thing. Stops you out here, gets you in here, stops you out here, bounces, and then you might try it a couple of times thinking I was wrong, and then bang, out you get. So you might have 3 losses before it even goes in the right direction. Well, it continues down. So the market knows that. The market will need to get liquidity. They know that it's going to be stops under there. They know that I'm not saying the market, I'm saying your bigger traders have made pre-plan this level and they're going to work that level. Okay. They're going to work around that level above and below. They're going to try to build a bigger position and try and work it off that level and try and expand higher and sell into that expansion higher. Okay. And this level actually matched off with, if we can probably get it, this is the actual underlying index. So there's a little minor level coming through here, which had traded up off before. The market's open gap down. So that a lot of people would have been looking for that gap close. Okay, gap close, you get a green candle, it's going to be a gap close. They get stopped out. Another green candle, it's a gap close, stopped out. Look, I was actually thinking it could have been a gap close. I was trading it slightly different, trying to trade towards these lows and got stopped out twice. Not stopped out twice, but closed myself, I think, twice. And it actually went short and made a little bit on the short side, but next to nothing because there's no follow through. But it was all this action here below a level on the Hang Seng, on the futures market or the CFD market, matched off to that level on the index. So they'll plan around this level on the index, and you can see it bouncing until it eventually held the level, and potentially it's going to ramp up a bit further. well, maybe to kick on a bit further. But or whether to roll from here, I don't know. But that at least was about 100 points. It rallied, from top to bottom. Let's just measure that out. From that low to that high was 100, nearly 200 points. So I got somewhere around a 100-point mark on that. It was somewhere in here when it started expanding. Took that trade up, had to hold on, got out somewhere up here just when it started. Basically at the top of this red candle here. I wasn't going to continue on pretty quickly. I was gone off the 1 minute chart anyway. So is that making sense? What you've got to try to do is follow. So if I'm looking at this level, my plan of attack would be wait to see, because you know that there's a prime area where if it's going to go through it, just let it go. Okay, if it's just going to plow through and that becomes a non-issue, and the market just sort of plows through and has a little minor pullback and goes into the next level, okay, then nothing lost. If you're trying to go long, if you're looking for a long opportunity, nothing lost because you haven't stepped in. I would much rather see the market plow through, see what happens if it retests, and then look for a short off a minor lower high, because you're looking for that expansionary trade. You're looking for it stopped out some shorts. You know that they've got to, you're going to get buys, you're going to get the buys, you're going to consolidate below the level. So you're looking for that consolidate below the level, consolidation below the level, shorts to continually add, and you probably, it sounds unfortunate, but you're looking for that retail market to get squeezed. They're going to go long, they get squeezed out. They're going to go long because they're expecting it to bounce back. Gap fill on the index, gap fill on the futures. They're looking for that kind of move because they've been taught that. And the market knows that. It's going to flush through, chop around. It's going to keep trapping traders on the wrong side of the action, keep trapping them, squeeze them, because these swings were like 70, 80 points. Okay, so if you're getting short down here, you're going to get popped out on the squeeze. So you're trading a breakout here, and you can see it was a prime trap. Got through, closed it back above the level, had a couple of green candles. There would have been buyers buying it off there, and it's come down and they probably look if they've got their stop below this zone in here. I'll just draw that properly. And they've just bought that green candle there. They've just got stopped out because market's come straight back down, flushed them. What that would have done also is trapped in some short sellers with a stop above, okay, which have eventually been squeezed out. So you can see how the market will need to trap traders on both sides of the action and chop around that level before it actually starts to pick a direction. So what we're looking for is that action there, or ideally, if I go down to the 5 minute chart, sorry, the 1 minute chart, we're looking for some sort of failed continuation lower. Okay, so what I was looking at here was we've got this lower highs holding in place. I actually went long in here, thought that would break off this higher low, didn't, took myself out as soon as we got this red candle in here, didn't take a big hit, probably a 20-point hit on that, but it did flush and then it started to ramp up again. So as soon as I saw this flush, if you carry that on in the 1 minute chart, it was ideally just, it's searching for liquidity. Okay, so you've got these levels in here, which keep getting flushed, and then bounce straight back. Come in here, potentially, about here, you could be trapping some traders short that might have shorted in here off the lower high on the one, lower high. Okay, we're going to get a press through. The big thing to note, if you're looking at the 1 minute chart, is the swings. Okay, so you've got press down, push up. It's quite a deep correction of this opening move down. Okay, then we've got this press down, didn't take out the lows very far, got through a few points, then a deep correction. Okay, come in and retest that low, then a relatively deep correction as well. So you can see the pullbacks are quite hard. So you know that it's trapping traders and squeezing them back out. So it's pulling back enough to squeeze them back out of the action. And then they might want to have another go again. Like this kind of thing, this push down here. I was looking for a short in here, but I wasn't really convinced that it was going to go. The 1 minute for me wasn't set up. The 5 minute was kind of extended. So I'm taking note that 5 minutes extended around that level, and we're starting to get this chop. If there was going to be further weakness and we're going to plow down like this into this secondary level a lot lower, it's a couple of 100 points lower, it should have been weak straight away because the number of sellers is greatly outweighing the buyers. Whereas here, we've extended into level and we've got sellers and buyers kind of matching each other out. Okay, so we can see that it's just trapping some traders, and then you can see the bigger money was really working a major long off that position. Whether it continues on, I would think we could potentially hold in here and start kicking back up again. But we'll have to wait and see how it goes. But what I'd ideally be looking for in here is that key high low on the 5. I want to see some failed continuation, maybe something like this, flush, and then pop. Okay, So potentially, if we can flush this level here, ramp straight back up and look for your 1 minute high low, which comes into play, um, and then just get a continuation trade rather than trying to fight where everyone's trading. So you can see that my style of trading is waiting for high lows, lower highs. And if you've been listening for a while, I guess I talk about it so much is talk about it so much, you should know that by now. So I'll be looking for that press down, weakness, grind back up into the level, but I don't want to see it break back up and finish close back above the zone. I want to see some, that's going to sucker in some sellers and then trap them for a move down. The bigger play, bigger buyers, so the bigger traders have broken it down. They keep selling into these, they set them up, keep selling into those little pops, selling into the pops. So anyone that's been long, they've been getting long, keeps seeing that there's no follow through, no follow through, and eventually they get stopped out. They sell back into the market, and the bigger boys, the bigger money is flowing down. So it's just a continuation trade for them, and it's just really trying to trap just below the level, consolidation below the level, and then powering on down. Now this is more just trapping, but there's no follow through to the downside. You can see it's different to this, not a grind up. This wasn't a grind up. It was more straight down. Sellers get excited, ramp back up again above the level, power down, triggering some sell orders, and then turn around and squeeze them back out. So until it just starts to run out of steam on the moves down, until people like myself have got the hint that, okay, this is not going down. If this consolidates here and doesn't continue on, I'd rather see this kind of action, a lower high to work from, which is potentially here. I didn't actually trade that on the short side, by the way. I was thinking potentially that was, but I was too convinced after this. We call it a retest fail just in here. I'll have to make that bigger, won't I? Potentially after that retest fail. After retest fail, I'm expecting a lot more back and fill. So once I got that, I didn't want to trade short into here because I thought we're just going to get chopped around again. And I was sort of looking at this moving average, sorry, the MACD, the momentum starting to pick up. It's far from stretched on the 1 minute. The 5 minute starting to roll back up again on the momentum. So you're sort of sitting there going, odds are that we're going to start to break up, and anyone that's been short in here building positions on the downside is going to turn around and have to bail if we do get squeezed back up again, which is pretty much exactly what happened. So you can see that rather than just sitting on the bid, like I was talking about in here, you're trying to see what the market's telling you. You're trying to see what is the lower time. Like if you're trading off the 5 minute, for instance, the 5 minute time frame, just say the Hang Seng, for instance, and you think, oh, I want to see what happens, it comes off there. You can use the 1 minute for a bit of a heads up of what could be happening. This is pretty much what I do. I'm looking at the 5 minute levels. I'm looking at the 5 minute action to try to trade, and I'm trading from the one when I get a bit more confirmation like this. When this market started to break up here, I was diving in here with stops below, and then just try to manage that on the way up until I figure that the 5 minute was expanding. So if you look at that candle on the 5, good little pop up here. So you've got, if that was going to continue on and there's going to be some more weakness to take out the lows, it should have just gone. Instead, it's pushed down, opened here, pushed down, flushed out, and finished straight back up on that candle highs, on that 5 minute candle highs. That for me was a buy just when we started breaking up through, what was it, 45. That's the kind of entry I like. We've seen this on the 5. You've got this RTF, you've got a higher low playing out, you've got a flush, and you know that there's been traps, another trap here of shorts, and it's going to turn around and squeeze them back out. So all I needed was that sort of confirmation that we're starting to break out of that flag, pennant, whatever you want to call it, and then I'm in. And I'm just trying to manage it. So the fact that we got a really good expansionary candle, I was willing to leave it a bit longer. I thought one of my big problems is getting out a little bit too early. And so I'm looking for a secondary move up, which played out really nicely on the 5. Okay, and I basically got out there. So I think it was from 45 up to, it wasn't that high. Somewhere around 50 to 50, 60, so about 100 points on that. So it was quite a nice little trade. So it's all making sense where you're waiting for this kind of confirmation to play out. You're waiting for the market to show you which way it's going to go. And you're not sort of playing around with, just buying into a level or selling into a resistance zone, because I do think, especially if you're trading shares, okay, it could be a bit different. I don't think share trading is more biased up, so it's kind of a lot easier just to buy into a support zone. And especially if you're buying shares, you don't use stops as much. You don't use margin. If you're using CFDs, For trading shares, you probably want to think about it a bit better. You want to try to break down. If I'm trading for my daily, for instance, and I'm looking for a daily that support to hold, I'm looking at my 30-minute chart to see heads up that it's flushing, bouncing back, flushing, bouncing back. Potentially something like this where it's going to hold that level, and then look to buy on the rise in the 30, knowing that the daily is going to follow suit eventually. Okay, and it's going to start to fight back up off that level, and then try to manage your risk on the way back up again. Okay, so see this. This is probably a good little example if this plays out. All right, here, let's go back to the 1 minute. See this kind of green candle. See it's pushing up, it's pushing up, it's pushing up. Doesn't mean it's going to go on with it, but you can see it's sort of grinded its way back down. So it's had this expansionary phase. This is a contraction phase, meaning the market's contracting back down. We're holding on the 5 minute above this level again. Okay, so it looks like it could be trying. Now, I would ideally want to see sort of a push through this zone, or at least test up. If it tests up to this zone around, say, 527, and holds this inside level, we'll go to the 1, might look a bit clearer. You can see the 5 minute, it's kind of made back the losses from the previous 5 minute chart. So if this kicks on through here, which it looks like it's going to, you don't want to buy that just now. If this holds a higher level and starts to power up through, I think it's going to just blast up and through 530. Okay, and then that contractionary phase, we've got a retest fail in here, like we just spoke about before. See the trap? Okay, pops through, finishes above, drags in. So it's dragged in some sellers off the high low. They're looking for continuation. It pulled back. You got your lower high in here coming in. Didn't get continuation. Instead, you've got an RTF. Oh, let's just, yeah, that didn't work, did it? We've got an RTF again with this failure and start to rally, and we're just looking for expansion again. So basically, you know, you could potentially just look to buy in here. I would want to trade it from the funnel, from the 1. Wouldn't mind seeing a little pullback and then pop, and then follow the MAs up. Okay, but you know that for me, we're either going to sideways market or we're going to get a secondary leg up of this 1. That's your first leg up, good pullback, and you get a secondary leg up. Don't forget, it's got an hour to go till the 2 o'clock close, and we could be at least attacking these highs at 578, or we could be going a lot higher. Okay, so this to me is more how I'll be looking to trade, and I'm looking to trade on the 5 minute. So basing my trades and pullbacks and everything and the action from the 5, and I'm looking for that expansion on the 1. Okay, so any questions there, just chuck into the chat. If there's anything you want to look at in the way of stocks, chuck in the chat, and then we go from there. Let's have a look at a couple of shares at the moment. Still there. Well, we bounced back a bit on the ASX, so it's not looking too bad. Good little bounce, but I think everyone will be sitting around waiting to see how the US goes tonight. ALK, which is one we've got. That's a bit of a sell-off, which is not very nice. It's not a very low volume. There's some algos playing around with that. Look at them, 14 bucks worth. So I'm still looking to follow this up. So this is the kind of thing, you know, like we're talking about of higher lows. If we were trading this, I think it was through 91. So you've got the downtrend. You're not trying to pick a bottom. If I just draw that up, I'll just draw that quickly. Okay, Pete. Anything to look at, mate? Just chuck it in there. So this is what I mean by just waiting for confirmation. Let's just look through here. I'm just trying to see. Say you'll, that's probably not the best thing. We'll just draw up some levels, but you can see, just arrived, good work, mate. You can see that there's a level through here. You can see that. Okay, the market's tested it. So this is exactly what we're saying. Test it 1, 2, 3. If you just bought it into that zone, I mean, fair play now that you're actually in front again. But I really don't think that's the best way to trade, because you don't know if the whole overall market was going to capitulate. Then this was going to go all the way back down to 50 cents. You bought it around 90 cents. You're sitting in a paper loss for a long time. And that's the kind of trade that you've got to, especially if we've got a complete sell-off in the US and we get dragged lower, potentially like could be happening now. I don't think so. But if that's the case, it's not the kind of trading you want to do. There was no clear signal for me to buy in here. You've got lower highs pressuring into a level. it's a pretty obvious level there. You've got traded before, backed off, pushed through, chopped around there before, held up there, and then expanded higher. So what you're looking for is potentially to bounce off the level, and then you want to see what happens on the first pullback. And if you get your high low, you know that buyers are willing to step in a bit off that level. You've got your confirmation. You might have to give up a few points, but what it does is if you're trading around 50%, 50-50, what it does, it increases that strike rate. Okay, you're waiting for more confirmations, only slightly more. You don't need, a lot of confirmation. You just need that high low to play out, which would, show me that the market's starting to trend higher. It's starting to find some buyers. Potentially the MAs are flattened out. You've got a punch, pretty much exactly what's happened here. The market's punched up through the MAs, pull back, retested, and then you've got your entry off 91. We had our risk there, and up we go. Okay, so that for me is more of a prime setup. GBR will do, no worries. So that for me is more of a prime setup here, okay, than just buying into that support zone. With a bid there, saying, okay, we got through, and then all of a sudden you've got your bid here, and then you're behind the 8 ball. I mean, say you bought it, did the same thing here. You saw it reject the first time. Okay, I'm going to buy into that. I might buy some more, and then you get a lower high, and you got these lower highs coming into play. It's not, like I said, I don't think it's the best way to trade, because what that will do is just add to your losing trades, because you're guaranteed to be wrong. If this is going to play out, you've got no choice. And if you're using stops, then you've just got stopped out. If you're not using stops, you could be sitting on this stock for a long time until it comes back. And like I've always said, that capital there that you've got locked away in a bad trade could be utilized somewhere else. Okay, so I'd rather take a stop. If I'm going to trade that way, take my stop below, call it a day, and use that capital to put it somewhere and make back that loss. Does that make sense? But ideally, if you're trading like this, you're trading off confirmation. You're trying to wait to the bigger money flow shows its hand, which is that. You've got a massive pullback here. Okay, they weren't supporting it at 90 cents. They were happy to support it at 70 cents. And you got the first power move back up, that spike to 95. And sometimes you might be looking at, I've missed the boat, but look to see if it consolidates. I'm always looking for that first pullback. If you get the first pullback and it's a high-low playing out, then I'm a lot more inclined to put my risk into that trade, okay, and put my money on the line, because I think I'm buying on the rise, and I can see that the bigger boys or the bigger money flow was happy to support that zone. They've started to pop it back up, and they might be buying some more here, okay, supporting that high low. So they might be buying on the way down, adding to a position at a high low, and letting it expand back up again, and letting everyone chase it back up. Okay, so that's what I mean. Even in shares, you wait for more confirmation. Not buying at levels, not even potentially not selling at levels. When you're taking a partial exit, I do sell at a level. Say for instance, if it gets up here, I'll be just selling to that level because I'm taking a partial. But if I'm entering, I wouldn't be entering at that level. If I'm looking for a short, I'll be waiting for it to flush up, potentially lower high come into play, then selling the break of that lower high. Risk is above, and you're looking for that bigger move off the level. Okay, so that's it on as ALCAL. We'll get on to, is it GBR? Yes, at the moment, GBR is heading down. Let's just look at the weekly. So this could be just what we're saying. It could be you've got the market heading sideways, essentially. Let me just draw that up. By the way, I might have to just call it a day a little bit earlier than 1:30 today. I'll just see. There we go. How many questions we get anyway? So you've got on the weekly chart, you've got kind of this time, this price action. You've got the low coming to play here, which is good. The market's popped up. You've had a pullback, and you can see this lower high coming to play. We've just flushed out this zone in here. So that's what I'm saying about not buying at the level, just waiting the market confirm itself. Okay, we flushed out with a move down here, and then we flushed out again. So it's constantly putting people back on the sidelines. If you're looking at that and you're waiting for it to pop up, I have no idea what they do. But it's only done 29, so it's a very, very small stock. That's obviously news-based rally, I'm guessing. What happened there? We've got news. Date was it? 3rd of May. Gold discovery. Okay, so it was on the back of some good news. All right, so especially with these smaller ones, you know that the bigger instos or the bigger money will be trying to flush you out. They get this sort of ramp up and they sell into it. Okay, so if there's any reason why they can do that, they might be given stock, they sell into it, buy it back, pressure the market down, buying it back, get that momentum down where they're just loading up, they're soaking on the way down, news comes out, bang, off she goes. All right, so either way, through here, it didn't give me a setup because it didn't do the old 1, 2, 3, that move where you got a high low to work from it. It sort of popped through. It did pop up here, but if we were looking at this stage going, okay, I want to see a high low, I'm going to clean this up. There was nowhere in here after we worked up this low, no higher low, no higher low. Retest that low here, popped up, looking for a higher low. It didn't get, went back through the lows. This move up here was just a spike, didn't get through. Okay. This was potentially the first time, if you're looking at that trade, where we did react up off there and we went straight back up. So you could have bought the break there at 6 cents, risk it around 4, and then rode it up. Okay, so that was kind of the only real higher low that I could see. Okay, and that's only based off, you might be looking at that. Very lucky, I guess, on the release of the news, but you can see that that rejection there sort of confirms that these lower highs come into play, and the fact that it's just come out some good news, ramped up, took out the high. You can, it's very loosely a very loose high low, but you can see that the momentum's in my favor, which I like to see. Momentum starting to push up, good volume coming in, no doubt about it. Really good volume coming in. Break of that highs, you can just say, well, we'll break of the highs on the back of that news. It's worth a try. Okay, but either way, right now, what we've seen is that expansion up, lower high come into play. So when a lower high comes into play, if you've got this kind of action, which you've got ramp, pullback, when you get this kind of action and that lower high comes into play there, you expect at the very minimum to start attacking that level there, which it did. It's just broken through 9 cents and it's back below, back below 10. From here, really, it's the same. If I wanted to buy this, again, I might be looking at the weekly thinking, look at that weekly thinking, okay, I want to see, it could be bouncing off this high, say off the MAs, for instance. I want to see if it bounced off the MAs. There could be that level at 7 cents, this previous high, broke through there previously. It could be coming back to retest 7, 6.5. Okay, and then I'll be flicking down to my daily to see what happens. I'm not going to just sit with a bid there. I mean, how many times have you seen these little stocks go ramped up and it's a pump and dump? They get dumped straight back down, they do nothing for the next 2 years. Okay, it could be one of those, who knows? So if I wanted to buy this, I really do want to see, I want to be working from my daily and I want to be working off a high low. I want to be working when I'm seeing more buyers starting to come in. I want to see confirmation on the upside. I want to see any sort of selling pressure getting soaked up at higher levels. Okay, so that's a key for me. Okay, if that starts to play out, then it's worth a little buy. Okay, but again, it didn't happen here. Potentially this is the only time you can see this little pullback, held the MAs, and we got ramped up. It was actually broke on that high, didn't it? 7 cents, and we got straight back up the next couple of days. So that was probably the one and only time. It would have been a hard trade, to be honest. Buying on the open could have been good, but your risk still had to be around about 4 cents there, wasn't it? Yeah, buying at 7 and risk at 4. That goes back to that daily, weekly chart I think we just had up. Yeah, risk at 4, break at 6.5, and probably didn't get the break. It would have been 7 cents, wouldn't it? Yeah, 7 cents from that daily chart. But you can see what I'm talking about there. With that confirmation, very loose, like I said, a loose high low, but that was starting to show some good signs. You can see that the market was going down here, spiking up, it's getting sold back into. So each time it sort of popped up, it got sold and made new minor lower highs, lower lows. Okay, you don't want to see that. You want to see the opposite. You want to see it get soaked up. You want to see people not waiting for it to pull back. You want to see that confirmation. As soon as you can see that, when it starts to build that higher level, then it's worth risking because you're potentially going from this little expansionary phase here, long-term contraction, lower, and you want to be buying into expansion. You don't want to be buying into contraction, especially being, when you're trading smaller sizes compared to funds, compared to the bigger flow of money. Okay, so that's, for me, I'd just be having to sit here and wait. My risk, for this, unfortunately, I'd probably, if I was long somewhere from here at 7 cents and I saw this pullback and I saw this lower high, I wouldn't be mucking around. I would have been out by now because of that very reason that, where is it? That very reason that this lower high, if it starts to play out like it did, you know that that's going to attack this zone in here, which was, what was that, 9 cents. So I would have been That was on the weekly chart. On the daily, potentially that red candle there, break of that low at 11.5 could have been out 11, 10.5, 10, anywhere in the next few days. Okay, because I'm still anticipating in here that it's going to take at least trade that 9 cent level. So I think the market always needs to flush out more traders. A lot of long stacked up, good volume, stacked up here, pull back, got some more longs in here. We need to squeeze them back out. Okay, as simple as that. And anyone that prior to that news knew that what was going to happen, which they do, unfortunately they do, they pumped it up and they're going to be dumping into the strength. Okay, does that make sense? Is it Manny? But yeah, if you're holding it, it really depends where you're holding it from. If you're holding it from right up here, it's really, and you're not willing to close it, then it's really just, it's lucky dip where it stops. Okay, could come all the way back down. It may not. It may retest 7. Haven't got too many levers standing in its way. It just depends what it wants to do. But the momentum's come straight back off. There's no real volume. The last time volume come in was that sell-off on the 17th, squeezing out. So it's still potentially squeezing out some buys. Let's get onto that last one, and I'll AX1. This, to me, looking really nice. Go to the weekly. Okay, so last year, big thumping on the sell-off, and it's been making its way back up since, okay, on the weekly chart. Holding higher levels. So, you got some prime setups. We'll just draw that up. Just to take note of the setups, on the weekly, high, low in here, you could be looking at that thinking, okay, if we break straight back up, I could buy. But you're looking from the daily, obviously. The daily is going to show that a lot nicer. This kind of move in here, if you can see how the market popped up, took out the high, couldn't finish above it. So if you can't finish above it, we're probably going to take the most recent high low, which it did, flushed it, finished back above. So, okay, game on again. Game on with a break there, with your risk just below sort of this level in here. Prime entry there. Off the MAs, okay, we're consolidating at the MAs there. We're looking for a further expansion up, potentially attacking into these highs, even into this high at $2, and it just continued on. Potentially in here could have been a buy if you look down to your 1 minute chart. Nice buy. So it's really given some good opportunities. I don't see this as a great opportunity off the MAs, but I do see this as holding higher lows. You can see here, holding higher lows, you're looking for an entry, sometime on that first green candle, even the second green candle. Okay. So now what we're looking for is if we've come back down, we've retested 250, we bounced off it, but we've got a lower high in play. Okay. So we go down to the daily chart just to see what that can give us. Because at the moment, looking at that weekly, I wouldn't be buying it. I want to be buying, if we can hold up here and we get this sort of minor, I'm probably talking too fine a detail, we get this minor high lows holding and we start to break up through maybe 290, 285, then I think this is what we call an ICT. Okay. ICT is inside continuation. Trade. And that's not going to work, is it? I can't move it. That's a bit of a bummer. Oh, well. Does that make sense? So inside continuation trade is that there. And it's on a trend up. So basically you get a trend up, you might get a bit of a pullback, and then it starts to resume the trend up, and you've got this inside continuation, which is not what I want to draw. This is what we're looking at. Okay, so it's continuation of the trend up. So here you've got the move back, flushes out some of these buys, holds a higher level. You want to be buying there, buying that break there. Anticipation, you've got a secondary leg up. Okay, so this potentially on the weekly, if we start to break up through 285, 290, could be the ICT setup, and we're looking for that continuation of this leg up here. Okay, so if we go back into a daily, just see what the daily's showing us. Let's get right in there. Okay, it actually looks quite nice. So it's got a few levels. Like I said, if you're looking at that and you're anticipating it, I wouldn't be anticipating it. I'll be looking purely for, well, actually alert this, I'll be looking for something, well, maybe we're still contracting, which in that case, you're following this level down because we've just broken, this sort of push down to 270, push down a reaction off 270, but sellers are still coming in here, they're coming in here. So they're still coming in. The sellers haven't finished yet. It's as simple as that. So if the sellers haven't finished and you want to buy, you stand aside. Okay, if you're long from potentially in here, I would be putting my risk somewhere around 260, because I think if we're not going to hold up here, we're going to start attacking 255. You might have, a bigger leg. That makes that a key lower high on the weekly basis. And just like before, if you go from that low to high, I can't do it on this chart, but you extend that out, you're sort of looking somewhere, 235 maybe. We could be extending that move down. That's just your volatility projection, because what we've done is broken this up leg. This is your trend up. First pullback, we should be getting continuation. We didn't. We failed at a lower level at 290. We're chopping around, but I think we've broken that uptrend there. So if you break the uptrend, you're either going sideways or you're going to go down potentially a bit more, just to squeeze out some more buys, especially the way the market is at the moment. It's a bit tentative. So for me, I'll be looking to see what happens. If I'm looking for an entry, I just want to see what happens here. And there's no reason why, I hope this is making sense, Pete. There's no reason why we can't, you buy the break here. We end up holding 270. We buy the break there because it's still high or low. Just because I drew a line there doesn't mean I'm right. That makes sense. Just want to see what's, yeah, because I'm pretty adamant if you drew it from here, this uptrend. Let's just try that one. If you drew a support zone from right up here, that's bouncing pretty nicely. So just because we've broken, I was looking at this trend up here, just because, well, not so much, it wasn't that trend, was it? It was from this low. If that's the trend and we've broken it, doesn't mean we can't, just by looking at the bigger picture, doesn't mean we can't hold in here and we break out through those highs. As long as we hold 270, I'd be happy for that for an ICT. Again, 285, 290, you would expect it to break through that, was it about 292, then you expect it to trade through the highs at 310. Now, if you get that set up, we hold 270, 75, and you get the setup, you're buying it, and we stall at 310, and we flush and finish below, just be on guard that we could have a double top, retest fail, and we're going to lower levels. Okay, so for me, just for now, I wouldn't be buying that, but it looks like, long-term continuation. It's been a good trend up, solid trend up, it flushes around. You can see it sort of chopping around here, pull back, and then go. You just got to look for your setup. Here's prime. It wasn't really any setup on this little pop-up here, apart from buying that break there at, say, 240. You can see buying this break up here with your risk just below that level, back on the rise then, you sort of risk rewards 1.5 to 1 by the time it hit the highs, maybe 1 to 1, 1.5 to 1. So yeah, it's still a longer term trend up. You're just really looking for your setup, okay, and then managing your risk as you go. Any questions there, guys? Probably. Let's just see what's happened with the up. Hang Seng broke up, pull back. So we didn't get that high low that we wanted to see. It's just come down and flush. So in essence, what we were discussing with this Hang Seng trade was liquidity and trading off confirmation. If you just bought this on the break here, you've got sort of caught with a bit of a trap. Maybe that's the level there, maybe that's, and you've sort of, rather than buying when it's starting to rise here, and this becomes a high low, that rather than buying that to your high low, and buying sort of on the rise there with your risk below, knowing that's going to continue on up, and then you've got this kind of move. You've got pop, pullback, rally. Okay, rather than getting that move, we've just failed and just completely ran straight back down again. Perfect, Pete. So you can see how our analysis was that the market's pressed down. We're flushing, trapping. Bigger money flow is looking to go up. Okay, they've got that move up. If it was going to continue on a broader sense off the 5 minute, we're looking at the 1 minute here. If this was going to continue, we should have got that RTF. It was a perfect setup. We got the pop, taking out that level we just had marked up before. Let me clear that up. Oh, didn't want to do all that there, but you've got key level down here. We're sort of looking for the bigger move to be, that's your pullback. Well, that's your pullback. That's one leg up. We're looking for this. Okay, we're looking for that to be the bigger move. Okay, on the 5 minute chart. But when you're breaking it down, this was the reason to get into it. Okay, let me just mark this up. That was the reason to get in. We wanted to see First pullback, what happened on the first pullback? Nothing. It just sort of popped up, went straight back down again. So that completely negates this secondary leg up on the 5-minute chart. Okay, so it's kind of, it's not an artwork, I guess an art, but it's, you know, you can match up your levels, you can see your levels, wait for that confirmation, wait for it to be proven that, you know, money flow is in the market. We are right. We're looking for the expansion of your secondary phase up to at least take through these highs, and buying that first pullback in here. So if I just draw that in a different color, let's just draw that in green. This is the leg up. So that's one leg up. That's your secondary leg up. But you split that down to the lower time frame. You're sort of looking for, well, that kind of, that's not what I wanted. I wanted to see that one. So we're sort of looking for that leg up here to do this, you know, on the 1-minute chart. That's what we're looking for. And pretty much the price action is just on the 5, it's just bang, bang, bang all the way up. But we didn't get that high low, straight back down. So it negates this trade altogether. And you know that something else is going on here, and I don't want to be part of it. But if you're just looking to buy that breakout there, which I've done, look, I've done that many times before. I've seen that flush. I bought the break. I might have been in profit, but I'm quick to realize that I want to see this on the longer term. If it doesn't just kick on, because if I'm going to buy that there, I don't want any pullback on the 1-minute chart. I just want it to go. If it doesn't just go, I'll be out. I'll be reassessing to see if we do get this kind of price action, this high low on the 5, and then I'll be looking for, high low on the 1. I'm looking to buy back into it again. But yeah, it didn't happen. So there you go, guys. Thanks for joining me. Any questions? If you've got any questions that I didn't cover, or something's not making sense, just shoot us an email to support@tradesetup.com.au. If you want to be part of the Discord channel, shoot us an email there, and I'll send you off the link. And just come in and have a chat. We've got some intraday traders. We've got some bit of talking about shares, especially ASX stuff. Bulk of it's based around ASX, and then all the ASX time zone, Asian market time zone. So I normally trade the Hang Seng a bit on the SPY, not a lot. Today was kind of a rare occasion. I like to trade the Hang Seng more, sometimes on the Nikkei, but I find the Hang Seng for me, it suits, and I trade it a lot better than trading, say, the SPY or anything like that. But the SPY can still shoot out some good setups. Anyway, guys, thanks very much for joining me. Like I said, if you did like the video, it'd be great if you can leave us a like and help us spread the word, build the channel, and we'll go from there. We should be on next week as well at the same time, 12:30. So just bear in mind that. And if you do subscribe to the channel, you'll see a pop up when I do put up, which I didn't. I put up a bit late today. Like I said, I got caught up mucking around the Hang Seng. Yeah, but g'day, Nathan. Yeah, but just subscribe to the channel. You'll get an alert, a heads up that there'll be a stream coming up. So I'll generally post it a couple of hours, set it up a couple of hours prior. Anyway, guys, thanks for joining me, and we'll speak to you again soon. Have a good day. Bye.